All right, now I want to actually walk you guys through filling out the Schedule C and what each section is like and what information you're going to be putting on this form. Now, whether you are preparing it yourself using at-home software or whether you're taking it to a professional, you're most likely not going to be typing it directly onto the form, but I want to explain what each line means. So, obviously the first thing you're going to be doing, it's going to have the name of who owns the business. So, this will be you, your social security number, and then you want to include what your actual business is. What do you do? What's your main service? And or if you sell a very specific type of product. So, for myself, I put tax preparer. And then this is a very important box right here. Box B is your code, your business code. So the IRS has a list of different business codes to classify what type of business you have. And this is based on your industry and then specifics within that industry. And this can get really confusing when you're self-preparing. A mistake that I see a lot of people doing is there's a code of 99999, which is unclassifiable. That is a huge audit flag, straight up. Everyone can find a classification for their business unless it is so obscure that people don't even know what you do. So take the time to either talk to someone or really read the descriptions, because you can fit your business into a category and get the right code there. And then once you've picked a code for your business, you want to make sure you're using that same code every year and don't accidentally switch what code you put unless you are closing that business and starting a new one. If you have your DBA set up, then that's going to go here under business name. If you haven't set up a DBA or you decided to just operate your business under your name, you don't have to put anything there. And then once you've gotten your tax ID, your EIN number, we've already done that, then that number will go here as well. If you have any sort of office outside of your home, then you want to include that here. Or if you have a specific mailing address just for your business that's not your home address, you'll put that address here. The next thing you're going to do is check off what your accounting method is. So like we talked about earlier, most of you are going to be on cash. Some of you might be on accrual, but again, that's something you want to talk about with an accountant. Then there's the yes, no's. So the first one is, did you materially participate in the operation of the business? So it's just basically asking, like, do you actually work in your own business, or does your business completely run by employees and you don't ever do anything? So for all of you, that's going to be a yes. I participate in my business. If this is the first year of you operating your business, or in the off chance you purchased a business from someone, then you're going to want to check the box right here on line H that this is your first year in business. After your first year, you never want to check that box again. And then we have lines I and J. And these ones, again, are important to answer correctly so that you don't have an audit flag. The first one is, did you make payments that would require you to file a 1099? So did you pay someone more than $600 for services, so like a contractor? And technically, if you paid an individual rent for an office space, you have to also issue them a 1099. So say an individual, this is not like if you pay a property management company and there's like a corporation that owns an office building and you rent an office, that's different. But if it's an independent owner and you pay them rent every month and it adds up to more than $600, then you technically have to issue them a 1099. So if that's the case, you want to hit yes. And this is the answer that will get you in trouble. If yes, did you or will you file the required Form 1099? So even if you're past the due date to file those 1099s and you realize, oh shoot, I did pay someone, I need to issue them a 1099, I'm going to do that. Yes. Click yes. Because if you are required to file 1099s and you click no, that means that you're violating the law, the tax law, and they're going to come and check up on you. So if you need help filing 1099s, there's some great online services, or you can talk to a bookkeeper or an accountant to help you file those 1099s with people. Okay, so part 1 is recording your income. All of your income is going to be lumped in to one category. So like I said, even though you have different tracking categories in your software or in your spreadsheet, when you report it on your Schedule C, it's all going to go together in one box. And this includes however much you received on 1099s. So the key is you want the amount here of your gross receipts or gross sales, so your total sales, to be higher or equal to all of your 1099s added up. Because if this amount is less than what was reported as being paid to you on a 1099, then there's going to be issues. The next line is if people returned product or you gave a refund, then you're going to get that back out. And the cost of goods sold is going to be added here after you do calculations in another section. So you're not going to manually enter anything there. If you have, there's some funky credits and other weird types of income that you could have received, so that would go there. And then all of these added up is what's going to go on line 7. So line 7 is the subtotal of all your income. And now, of course, the confusing part is expenses. So we talked a little bit about expenses before, but for tax purposes, they're very broad categories, and not everything is going to fit into one of these categories. Some things you may have to add as an other expense. So I've highlighted some of the most common expenses for service-based solopreneurs, freelancers. Advertising costs, so things like Facebook ads, Google ads, ads in print magazine, anything like that is going to go under advertising. Commissions and fees is something if you paid out a company a commission or a finder's fee or something like that, that could be considered to go into that category. Contract labor. So this is those people that you did or could have issued a 1099 if they met the threshold. So even people like your web developer or your virtual assistant or your maintenance person, a repair guy on some of your office equipment, that would all fall under contract labor. I'm going to skip down because I don't want to confuse you with those two yet. Insurance other than health. So that's key. If you have business insurance, any type of liability insurance for your business, then that is going to go here on this line. And that could also include, say, like a bond. That would be considered insurance as well. Interest. So they have two different lines for interest here. They have mortgage interest, and that means if you bought a piece of property that's specifically for your business and you have a mortgage on it. This does not include your personal home or home office. That's completely different. So if you own a piece of property for your business and pay mortgage interest, then that would go there. Other interest, so that normal thing is credit card. If you have a business credit card, if you have a business loan, if you have a business line of credit that accrues interest, the amount of interest that you paid is a deduction right there. And this is only on business debt. So business credit card, business line of credit. It cannot be a credit card that you mix personal and business on. That doesn't work. Legal and professional services. Obviously, a lawyer, a tax preparer, a bookkeeper, a business consultant, somebody who does more of those type professional services. Office expenses is a very broad category, but always includes your office supplies. So things like physical paper, pens, notebooks, binders, all that sort of thing. Also includes stamps and envelopes and postage for things, just everyday postage expense. It's not going to include if you are shipping a physical product like you're selling on Etsy. Next one is rent or lease. So if you rent machinery, rent equipment for your business rather than purchasing it, or you lease it, then that would go here. Also, if you have decided to lease a vehicle as your business car, like your business vehicle, so you only use it for business, then technically you can deduct the lease there. And then rent on other business cars. So this is where your office space rent or workshop rent, or maybe you need to rent a storage space to hold your inventory, that would go here on other business property rent. I didn't highlight repairs and maintenance, but little things like if you have a computer that is your primary business computer and you had to go take it into the repair guy and get something fixed, that would technically go under repairs and maintenance. So supplies are, again, very vague, but if you have to buy specific supplies that aren't office supplies for your line of work, and it's not stuff that you're buying to make something, it's just like odds and ends, that can go there. And there's more description in the Schedule C instructions. Taxes and licenses. Taxes and licenses are for both professional licenses, so if you have to pay to maintain a license within your state or within your industry, those fees. Taxes like your business license fee for where you live would go there. And also the amount that you paid out in sales tax. So when you file your sales tax return, then that is also deductible back on here. Travel, meals, and entertainment. Okay, so the reason that these are broken down separately, so travel is, say you went to a conference, you went somewhere outside of your normal working area. So you went to a special event, something of that nature. Or you're working in a remote location with a client. So you're a wedding photographer and somebody's getting married in Hawaii, but you live in California, but you agree to fly to Hawaii with them and photograph their wedding. So the plane tickets, the hotel, a rental car, all of that is your travel, and that's that deduction. Meals and entertainment are separate. And the reason that it is separate is because on any meals and entertainment, your total cost that you have, only 50% of that is actually deductible. And when it comes to meals and entertainment, you really have to do a good job of documenting it with receipts and notes and making sure that you can prove that that meal or that event or whatever you did was with a client and was reasonable for your business and what you were trying to accomplish. So I have some more resources and articles on that in the resource section. And then the other things that you may have stuff on is going to be utilities. If you rent an office space, then the utilities for that rented space will go directly on here. If you have employees, then your wages to your employees. And then other expenses, we're going to cover further down because it has its own section. The next section is basically a bunch of tallies, subtotals. This next little section below expenses is your subtotals. So this is going to be the total of everything above in part 2. This is going to be, again, your tentative profit. And then you can add the additional deductions of home office, which I'll talk about in a minute. And then it's going to list out what your actual net profit or loss for your business is. So this is another confusing one that I want to touch base on, and that is, it's going to ask you, is all your investment at risk, or is some of your investment not at risk? And really what that means is everything that you've poured into your business your money? Or have you put other people's money in? And that, I'm not talking about like credit cards and lines of credit, but do you have investors? So all of us are most likely going to put all of our investment is at risk. If you don't think all of your investment is at risk, talk to a tax preparer so you can analyze that in more detail. Part 3 of the Schedule C is where you enter in your information on your cost of goods sold. So again, this is for people who sell physical products, who have to maintain an inventory and have a cost to either buying those products or producing those products. So this is something that is a little bit more complicated. And again, I would highly suggest that you discuss it with a professional tax preparer and not try to do your own taxes when you are having physical inventory involved. Part 4 is vehicle information. So if you actually use your car for your business, you drive to meet clients, or you just drive around to different locations for the purpose of your business, then you can claim those vehicle expenses. And there are two ways to deduct your vehicle expenses. There's standard mileage and there's actual expense. So the majority of people who don't have a separate car just for their business are going to use standard mileage because it's easier. And so this is just where you're going to put in your information for your car. And an important thing to know is that when you are wanting to claim business mileage or anything involving your car, you need to keep some sort of mileage log. And I believe we talked earlier about some apps that you can use, including ones on your phone or anything like that. So make sure that you keep a log of your mileage so you know at the end of the year what your total miles were for business and your total miles were for commuting. Commuting is, say you rent an office space and that's your primary place of business. So driving from home to office, that's not deductible. And then other miles, so your personal miles. And then these are the questions that it's going to ask you, and it may vary depending on your situation. So you just want to make sure that if you're claiming any sort of mileage or gas car deduction, that you have evidence to support your deduction and that evidence is written. So you have a mileage log. That's really the key. Or if you're writing off actual receipts, that you also have the gas receipts. Part 5 is the other expenses. So we're using Part 5 to spell out those other types of expenses. So things like your bank fees, like your bank account fees if they charge you a monthly service fee, reference materials, education courses that you've taken, especially if they're not at a accredited school, just like online courses, training on Evernote, training on a specific software. Those can be items that you add here into other. So we want to be careful not to get too carried away into putting everything in other. You want to try to put it into a category up top, but don't be afraid to use other expenses if something just really doesn't fit into those standard categories. So there's 2 other types of deductions that are going to require more forms than just the Schedule C. The first one is depreciation, which is going to go on Form 4562. And this is for when you purchase equipment, furniture that has a useful life of over 1 year. So your examples would be a computer, laptop, a printer, office furnishings, special tools. If you bought a building or an office building or a building to use for your business, or you bought a car for your business that's just your business vehicle, those sort of things are going to need to be depreciated. And you're going to have to fill out this form, and it's a little bit more complicated, and there are different types of depreciation. So there's a lot more involved there. The other one is going to be office and home, which is on Form 8829. So if you have a space in your home that you use exclusively for business purposes, that allows you to then take a deduction based on the square footage of that space. It does not have to be its own separate room. It doesn't have to be a spare bedroom. It doesn't have to be the garage. It can be an area in another room. There doesn't have to be walls that separate everything, but you have to be able to show that that space is used exclusively for business. So this is my office. I'm only in here when I'm working. Or, this is my desk, or this is my corner. I'm only here when I'm working. I don't sit here at other times. I don't let other people use this space that aren't participating in my business. So again, both of these types of deductions require some special calculations that are not recommended for self-preparation. So what I'm saying here is that, yes, TurboTax or whichever self-preparation software will ask you questions, and you can plug in the information and it will try to crunch the numbers for you and will put it onto your taxes. But the reality is that there's more to these types of deductions than you often realize, and more than I can obviously train you on in a overview course. I took a course on depreciation that was over 12 hours, just learning the ins and outs of depreciation for my own professional license. So that kind of shows you how complicated things can get. So I really recommend that you talk to a professional and get some help with these sort of things so that you're not messing it up and so that you're not putting yourself at risk for an audit. And then there are a few other deductions that are for sole proprietors, for self-employed, that don't go on Schedule C. They go directly onto your 1040. These are often referred to as above the line deductions. So these are before you take your regular standard deduction and other things. So the first one is 1/2 of your self-employment tax deduction. And this is usually automatically calculated, but how it works is that since employees only have to take out half of their self-employment and Medicare tax from their own pay, the other half is covered by their employer. The IRS does this weird deduction so that you're paying slightly less income tax on that. So that's the first one. The second one is self-employed health insurance premium deduction. So, as a self-employed person, the health insurance premiums for yourself and your family that you pay on an individual plan, this can't be something that gets paid through a spouse's job or anything like that. So, but it could be, say, you went through the marketplace in your state or healthcare.gov. That would count as self-employed health insurance because you're paying directly to the insurance provider. So you can deduct those from your income. And again, that goes on the 1040. And the last one is the self-employed SEP or simple retirement plans. So these are retirement plans specifically set up for self-employed people. They're different from an IRA. They're different from a 401k. So this is something you want to talk to an investment planner or a financial planner to help you determine that stuff. But the money that you do put into those plans once they are established is a deduction on your 1040. Now the question of, okay, I've done my taxes, I filled it all out. What do I do if I owe money? Which is an unfortunate thing that happens a lot of times, especially for the first couple years that people file self-employed. So there's a number of options how you can pay if you owe taxes with your tax return. First one is have the full amount directly debited from your bank account when you file the return. So you can enter this information right on your tax return, set the date that you want the amount to pulled out sometime between whenever you file your taxes and April 15th, but it has to be by the deadline. and they'll automatically pull the full amount out of your bank account. So as long as you know that you'll have that full amount in your bank account, you can choose that option. The other option is to mail a check to the IRS for the full amount after filing the return. So you select this when you're filing your taxes, and it'll give you the instructions on how to mail the check in. There's a little voucher that you have to include with the check that has your tax information on it so that it gets credited to the right account, the right person. You cannot just mail a random check to the IRS and then give you credit. There's some steps you have to take. And the last option is to file your tax return and then pay with a credit card using a third-party processor before the tax deadline. So there are companies that will pay your tax liability on your behalf by charging your credit card. But usually those involve additional fees. So just be aware of that. So you can do that as well. And the other big question is obviously, what if I owe more than I can afford to pay? And that is just such a bummer, but it does happen where you just had poor planning, you didn't know, you weren't informed, and you made a bunch of money, and now you owe a ton of money and you don't have it. So the first option that I recommend to people is send as much money as you can via check when you file the return or by April 15th. So even if you file your return, say, in February or March, you can send a payment and postmark it by April 15th with as much as you can scrounge up to pay down that tax liability. And then you're going to send additional payments as soon as possible to get it fully paid off. You may wait until you get a letter from the IRS. So this is a time where you will get a letter from the IRS if you do not pay in full with your tax return. And they'll tell you how much you're going to owe with interest and penalties. So if you don't pay in full, there will be interest and penalties involved with getting the rest of that paid off. But I will say that the interest rates that the IRS charges versus the interest rates on, say, a normal credit card or line of credit or anything like that, the IRS charges way lower interest rates on things money that you owe them compared to using a credit card. So that's something to consider. A lot of it is going to have to do with how much your total amount you owe and how much you think you can pay off and how quickly you think you can pay it off. The other option is you can set up a formal payment plan with the IRS for monthly installments, but I will warn you that once you have set up this payment plan with the IRS and you have set your monthly minimum payment, there is no missing a payment. There is nothing you can do. You have to pay that minimum amount. Otherwise, you go into massive default, and the IRS can do a lot of really not nice things to get their money, and they will. Obviously, the higher dollar amounts, they're going to go chase after a little more aggressively. But if you set up a payment plan, make sure that whatever payment amount, minimum amount that you agree to, that you can pay every single month no matter what. You can always pay more, but you cannot pay less. So now we've reviewed the taxes, the tax forms. Hopefully you feel a lot more informed and not quite so in the dark when it comes to what your taxes are going to look like and how to file them. I definitely have to say that taxes are not optional. You're going to have to file them, but stressing over them is. So I feel like I am a parrot saying the same thing over and over again, but I really do recommend as a sole proprietor that you consider working with a tax professional, that you not waste a lot of time and stress and concern trying to file the taxes yourself, especially if you feel unsure or you think that you need to add some of these more complicated deductions onto your tax return. The money that you will spend on a professional tax preparer will save you so much time and will really give you that peace of mind that you want in your business and with your taxes. Now, I will say that there are different levels of tax preparers, and not all tax preparers are created equal. So there are a few designations and licenses that you want to look out for. Everyone is very familiar with a CPA. So that's a chartered public accountant, and they are in all 50 states. So you can find a CPA in your area and meet with someone and talk to them about your business. Especially when it comes to CPAs, you're often not going to be able to get in as a new client unless you've established yourself outside of tax season. So don't be shocked if you call around to some different offices and they're booked and they can't take you because they're not taking new clients. So take the time outside of tax season to meet with accountants and get to know them and find one that fits with you. The other type of license is called an enrolled agent, or an EA. And this is similar to a CPA, except they are specifically licensed for taxes. So taxes is their specialty. They don't necessarily specialize in other types of accounting. They don't do forensic accounting or anything like that. They do taxes. They can represent you in an audit, so can a CPA. So an enrolled agent is also an excellent choice. They'll be all over the place, and you can look up someone in your area or find someone who works remotely. And then there are currently 3 states that I'm aware of in the US that offers state level licenses. So those states are California, Oregon, and New York. So in order for anyone in those states to prepare a tax return, they have to hold a state license. So currently that's the level that I'm at. I hold a state license in California, but I'm also studying to become an enrolled agent. And once I pass those exams, I'll have that designation. So at least with a state license preparer, you know that they have done some education, that they have to be registered, and that there's some monitoring going on. Beyond that, right now, there's another federal lower level designation, which is AFSP. That stands for Annual Filing Season Program. So lower level tax preparers can register and be a participant in this program, and it means that they have passed a education course and that they have signed an agreement with the IRS to follow the ethical guidelines and standards of the IRS preparers. So this is another option that you can go through, and they will be listed on the IRS website. So there is a directory. It's not easy to find, but they're there. And so these, again, are people who take their craft a little bit more seriously and make sure to study tax law. You want to be careful when you are selecting a tax preparer that you aren't just going for the cheapest option. There are plenty of people who claim to be tax professionals and will prepare your taxes for a ridiculously low amount. And the problem with most of these preparers is that they're either not licensed, not even registered with the IRS, so they don't have a tax preparer ID. They're often using a home version of TurboTax or somehow filing it online, and they're not signing the tax return, or they're doing it by hand and mailing it in, which again is not allowed by the IRS anymore for professional tax preparers. And it's just scary, the people that will claim to be a tax professional that have no idea what they're doing. So don't be afraid to ask the person that you're meeting with what their credentials are, and even verify those credentials. Obviously, people who are saying they're a CPA or an EA are usually not lying. They have their license. But other tax professionals, find out what kind of credentials, what kind of education they have in their field. So you're going to someone who takes tax preparation seriously. And there are Also, the middle option, of course, of going to a chain tax preparation office such as H&R Block, Jackson Hewitt, Liberty. And I don't want to completely discourage you or say bad things about those types of businesses, because I once worked for H&R Block and that's where I learned how to prepare taxes. But the issue with many of those types of businesses is that there's inconsistency in the tax preparers. So there are some amazingly wonderful tax preparers who know taxes inside and out that work for those companies. And there are other tax preparers who are practically clueless and have barely passed their tax basics course and are preparing tax returns. So again, if that's the best option for you right now to go to one of those offices, just make sure that you're not meeting with someone who is not qualified to prepare your return. Make sure you're meeting with someone who does a lot of business returns and is going to take the time and walk you through that tax return. So that's all I have to say about taxes. I know this was a longer lesson than normal, but I appreciate you guys bearing with me and sticking through. And feel free to post questions on this lesson, and I will see you guys soon.